This conference will now be recorded.
All right. Good evening, everybody. This is Greg Morton. It is Saturday, May 14th, 2022, and this is a weekend update for the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this educational purposes only. Not recommending any stocks or securities to buy or sell. And as a lot of people have been learning lately, all investing has substantial risk of big losses. So today we're going to look at the M factor. We'll look at this week. What do we see? Constructive or destructive action? Still lots of red flags out there. Charts, leading names. We're looking for setups. We'll just look at a couple. Going to cover more in detail at our meeting on Tuesday, and then I'll give you the agenda for our regular, more lengthy monthly meeting coming up this coming Tuesday. So as we know, and as O'Neill teaches, the M is the most important letter in Canslim. 3 out of 4 stocks follow the general market trend, and I think in a bad bear market, we could get up to 9 out of 10 following the general market downtrend. So we got to stay in step with the trend, otherwise we're going to have a bad outcome. It's very difficult. Really, I think it's impossible to win on the long side when the trend clearly is not your friend. So let's look at the M factor. O'Neill tells us to study 3 things: the action of leading stocks. We really are down to ones in the energy sector, which have even taken a big hit in some of those. Actions of stocks owned. We have one little Indian left in the group teaching portfolio. And then market pulse, distribution day count, price and volume on the indexes, as well as the data I have in my coloring book. So let's hop out of here and take a look at those. Go to MarketSmith first. Look at the indexes. Go to the NASDAQ. Here's the daily. So this week just pretty much continued cascading down till Thursday and Friday when we got these bounces, big bounce on Friday on lower volume. And you can see we're now down at 30% off the high, which happened back on November 22nd. So this is a serious bear market. No doubt about it. RS line still in a downtrend. Below all moving average lines, they're all diving. Just still not really anything constructive here or on any of the other charts. S&P finally got down into, dipped into official bear market territory. It didn't close down there. That's the 20% offline. Still, we got the moving averages. Lines are all upside down, all trending down. NYSE, same thing. I don't have the 20% line on here. It hasn't come down that far yet. Dow, about 15% off. So it also has not gotten in bear market territory. Russell all the way down at 30%, just like the NASDAQ, which is kind of interesting. It's not worse than the NASDAQ. And S&P 600 down here closing in bear market territory. Finally, that's the 20% offline. So still a lot of damage, still well below the 21-day, well below the 50-day. Needs a lot of work before those start looking good. And if we go over to the coloring book, just everything, we just have a whole lot of red, still red. So I only have 7 buying days, 13 selling days in the last 25-day window. Still have a high distribution day count, 7 on the NASDAQ, 7 on the S&P 500, and 8 on the Dow. Of course, IBD doesn't track them currently because they're in correction. I still like to know how much distribution there is. So that's where we are on that. We had rally days this week. Well, let's see, first we started out with the Dow rally day failing at the beginning of the week, had new rally days on the NASDAQ and the S&P 500, which immediately failed the next day. And then on Thursday, we had rally day number 9 on the NASDAQ, rally day number 8 in this bear market on the S&P 500, and we had distribution on the Dow and a pink rally day, just to confuse us. So all the indexes have a rally day in place as of Thursday. So the earliest we're looking for follow-through days will be on Tuesday of next week. Market school exposure model remains at 0. We're in a power outage situation. New highs, new lows remain negative, with new lows outpacing new highs. So again, even though we had an up day on Friday, volume was down. I mean, the NASDAQ was up 3.82%. So that's a big up, but the stocks that were up were just like all the ARC stocks. They were just beaten so far down. It just looks like dead cat bounces to me until proven otherwise. And if we get a follow through day, then I will be proven otherwise. So we'll just watch and see what happens there. And if we go to the group teaching portfolio, we only have one position, 16% invested. Merck has not triggered any sell rules. And it actually has held up as the market's getting slammed. So the bear may get it too, and we'll be back to cash if that happens, down 10.1% for the year, and just have had, really a nasty day Monday. That kicked us out of somewhere in there, EE and anything else that we had smaller pilot positions in. So let's go back over here. Covered all that. Just some of the negatives. Window of opportunity still closed. IBD's in correction. Everything in the MMTS trend lines in my coloring book are red. Heavy distribution days, 7 on the NASDAQ, 7 on the S&P 500, 8 on the Dow. Market school model 0, we looked at that. Still a distribution dominant tape. High-low indicators weak. Had rally days this week. Sort of the summary. The Dow failed. NASDAQ and S&P 500 had new ones. Those failed. And then all three had new ones on Thursday, as I showed you. Charts are getting whacked still. It's been the worst earnings season I've seen in a long time. I mean, massive plunges, 20, 25%, just over and over and over. Growth was in a bear market. Everybody else is called up. And we're still in a power outage currently. So lots of red lights still. It's really just an angry sort of bear mauls all week with that little bit of weak redemption at the end of the week on Friday. So we'll see how that works out. Still a lot of headline risk. Fed talk, now the Fed walk. How fast, how far on rates and balance sheet reduction. Got inflation, got recession fears, which are real. We now had Powell this week admit, well, maybe we can't have a soft landing. So that rattled the markets, although I think we all already knew that. Got supply chain issues. Earnings season was super ugly, as I mentioned. War situation, today's day 80. Have Russia exposure issues coming up in conference calls. So want to keep an eye on, are we going to have this capitulation? We're going to have a real, big fear event, big put call spike and other things going on, or maybe we're going to have a tradable rally and then we might get all this if we get a third leg down. Are we going to see climax runs in the energy stocks? A lot of those got wagged without actually having climax runs. So that's sort of the last healthy sector tree in the forest. We're seeing really not leading stocks. Apple and Tesla, I think, were the last two. I think they've been chopped down. Charts are broken down. Average bear market's 9 months. We're about 5 3/4 months in. That's not exact at all, but it's still something to be aware of. So let's look at some charts. In MarketSmith real quick, I left some of the ugly ones in here. Starting with ARC, go to the weekly. So still 67% off, even with sort of this dead cat bounce that happened at the end of the week. Let's see if we can see that on Friday. So continued to cascade down, stopped on Thursday, and then was up on Friday, still under even the 10-day moving average. And then some stocks that have just, here's again some of the stocks getting creamed during earnings season. Netflix, 73% off its recent high. Coin, 81% off Roblox 76% off. Even even with this good day, being up 18% just really doesn't look that good when you're still 76% off your most recent high, which was not that long ago, end of the year. Path again had a bounce this week of 2.9% and is still down 80%. Upstart down 90%, and just ugly, just slammed. Well, is it back to its IPO? No, IPO was at 20, so but still super ugly. Two that are holding up. Here's Merck that I mentioned. Gorgeous RS line. I mean, it's going flat here, but you can see what the market's doing. So this one, it's like a heavyweight price fight. I mean, it's just going blow for blow with the bear in the ring, and we'll see if it makes it or not. This is its all-time high. See if it can break. What is that? See if it can break past that. Oops. Track price. What do we have there? 91.40. So if we could get a tradable rally, if it could go through that, that would be nice. It did break out this week. Seems like Thursday, no, really broke out on Wednesday and couldn't hold the pivot. That was the day it had at least 40% volume. And then the next day, it did continue up on above average volume. So, we've got breakout volume in the vicinity of the breakout day. And then Olin, this may be one to keep an eye on, Canslim quality, nice RS line on the weekly. Trying to do something again. You can just see the market coming down and its RS line going up. That's a real key in these bad markets for identifying strength. So you want to pay attention to that. Okay, and we're going to look at more list at our meeting on Tuesday. Some areas that we want to keep an eye on, as well as my personal sort of separate follow-through day watch list that I keep just to see what's setting up if we really get that follow-through day. So we looked at that. Here's our agenda for Tuesday. So we'll talk about the M factor in a little more detail, including going back, looking at some other bear markets, reviewing the rally day, follow-through day system very quickly, just so we remember what we're looking for. I'll cover any Canslim nuggets from IBD Live. I have to check my note. I can't remember if I had any this last month. Some Market Smith tips. We're going to show you how to drag and drop list and talk about a screening idea for RS and bear markets. And I'm going to go over the rally day, follow through day watch list right now. That's my list. I'm going to go through this in detail since we just finished an earnings season to kind of get ready for the next one, how to work this into your weekend routine. And really, this practice, the way I'm going to teach it, really helped me this earnings season to see how bad things really were. I had a little more insight, I think, than I normally have by doing this. So I'm going to go over that with you and teach you how to do that. We'll look at the cousin stocks in the EV space. We're doing that each month, kind of the lithium plays, the uranium plays. They're not doing well, but we're going to keep an eye on them. We'll look at the group teaching portfolio, doing post-analysis we need to do. IPO market, pretty much still dead as a doornail, but got one or two we may want to keep an eye on, and we'll do open mic Q&A. So prior meetings are recorded. Those are available. If you want to come to the one this Tuesday, you can sign up for that. You just go to the Stockyard Meetup site. The tuition for the meeting is $12, includes the recording, the slide decks, and links to any presentations that I talk about. And if you're a first-time attendee, I send you a copy of last month's meeting, slide deck recording, and all those links. So let me go back. There's the contact information. If you're interested in ordering prior meetings, it's a great time to study. If you don't have cell rules, there's 3 series set on writing your own cell rules. Weekend review, 2 detailed ones on that. So you can email me. I send you the whole list and ordering instructions. Of course, there's other ones, free stuff on my YouTube page, which is where you are now. Teaching on how to use the group teaching portfolio spreadsheet, my video on the 8-week hold rule, which really isn't even a rule, that sort of thing. So a lot of resources out there, good things to study, and I'll talk about some additional resources Tuesday night also. So that's it. Hope to see some of y'all Tuesday. Have a good weekend review, and be an interesting week to see if we can get a decent follow-through day coming up, and if we get a tradable rally, or if we just continue down. So that's it. I'm out of here.